What's up, guys? Welcome back to the channel. I'm Mike, the Everyday Money Guy. If this is the first time that you've come to this channel, consider subscribing so you don't miss any future financial videos. Also, if you like what you see, give it a big thumbs up so that it helps this video out and helps the channel. Guys, today I want to talk to you about 3 traditional paths to wealth that will bring you money, success, and ultimately freedom. And then one that a lot of folks are on that is probably not going to get them to where they want to be in their life or for their financial future. Okay, first up I want to talk to you about stocks and investing in the stock market. I've already made several videos about this, about the effects of compound interest that you can check out on my channel. But as far as for building wealth, this has probably made millions of dollars for millions of people, made those folks millionaires. The biggest upside to this investment, investing in the markets, is the ease of the barrier to entry. The cost is extremely low. For just a couple bucks, you could get a share of any company for whatever their share price is, and there's plenty of companies in the teens, 20s, and 30s that you can buy shares of. Or, as I like to suggest, you can buy an ETF or a mutual fund that comprises many shares of many companies, and that allows you to diversify your investments with just one investment. So like I said, that has the lowest barrier to entry, and it's very easy to trade as well. You used to have to call up brokerage and pay a fee for every time you trade, and it was quite a bit higher than it was now, and things move slowly. Now we have online brokerages such as E-Trade, or I believe Capital One has one. They may be the same company for all I know. And then you can invest directly through like Vanguard, Fidelity Investments, things of that nature. And it makes it very easy to do from a transactional standpoint, and the barrier to entry as far as dollars is relatively low. However, this usually returns, out of the 3 things that we're going to talk about today, the slowest returns. And this is a traditional get rich slowly type of thing. And I believe that it's important for everyone to have this in their financial plan because it does consistently produce returns. For example, the S&P 500 typically returns around 10%, usually like 9.8, 9.9, since records were being kept of its returns as far as value and dividends. Another negative to market investments is that it is subject to market forces that aren't necessarily related to the fundamentals of the companies that you're investing in. If you invest in individual companies, or if you invest in mutual funds or ETFs that are invested in multiple companies. So things of this nature could be wars, civil unrest, political changes, just things and news items, different companies having either good or bad press. For example, while we're having a down economy, if the government is talking about injecting stimulus, it can artificially raise prices. So things can go both ways. And when it's swinging upward, it's very easy to stay the course. But when things are really falling off, and not necessarily for a fundamental reason, that can cause people to sell investments at losses if you don't stay in the market. And I'm going to have a video on that in the future about what to do when markets are crashing, how to handle that. So again, subscribe and stay tuned. Get yourself a coffee break, and we'll be on to the second path to financial success and freedom. All right, guys, your second path to wealth, money, and success is going to be real estate. And this has made, they say, more millionaires than any other investment. This is how, for example, Donald Trump, love him or hate him, made his billions of dollars using real estate and the specific tax and financial advantages of investing in real estate. So let's start with some of the negatives on real estate. There is an extremely high barrier to entry. You're going to need a lot of money. You're either going to need 100% of the price of a property, be it residential, commercial, industrial, raw land, whatever it is that you're investing in, or you need a sizable down payment for investment real estate. You're typically not going to get a 3.5% down FHA loan for investment property, you're probably looking more of at least 20% to up to 30% or more, depending on the circumstances, but 20 to 30% down is probably where you're going to be. In addition to that, these are considered riskier investments for banks, so your term will be shorter and your interest rate is likely going to be higher by at least like 1% or so. Now, I did mention that you couldn't get a 3.5% FHA loan on an investment property, and there is a way around this, and I will get into that in another video about how you can buy a multifamily investment property, residential investment property, for 3.5% down. Again, subscribe so that you don't miss that. But back to investing in real estate. Another one of the negatives that you're going to have is that you have to manage things. In stocks, you just buy it, forget it. It's there. If you want to sell it, sell it. If you're managing real estate in whatever form it is, if it's commercial, residential, industrial, you're probably going to need to have tenants. They're going to need management. You're going to need to screen those tenants. You're going to need to, put them in, deal with their complaints. And if you do well on that, you won't have many problems. But if you don't, you will have a lot of problems. You also have to deal with buildings and the inherent decay of buildings over time. You have upkeep, painting, roofs, what have you. As well as when you do have those things, if you are an investor, you don't want to be doing those items yourself. So then you have to find, vet, hire, and manage contractors, bankers, etc., for you to make this investment work for you. The transactions also take a long time to do, between finding a property, doing inspections on it, securing financing, closing, putting tenants in before you can finally get paid for your efforts. However, once you have those things set up and you have tenants in place for whatever it is that you're doing, residential, commercial, industrial, what have you, these type of investments tend to throw off cash monthly. You're going to be getting some portion of that rent every month in your pocket. And a lot of times this will be almost passive income, where you don't have to do a lot on a daily basis to receive this income. There are also a lot of other benefits to this asset class, and is that these types of assets typically appreciate in value over time, while you get to depreciate them on your taxes. So you get to write off what would be the useful life of buildings and equipment, while it actually goes up in value. There are also quite a few other tax advantages to this. Anything that you spend money on for this is a business write-off. Anything that you put in that is called a durable good, like a furnace, a dishwasher, upgrades, things of that nature, can be depreciated. You can use a 1031 exchange in the future to sell a building, take that money, move it to buy another building, and pay no taxes on that whatsoever on that sale. So they throw off cash, they go up in value, you get to depreciate things on your taxes. There is a chance, especially in the beginning, that you may be able to actually make money in real life and show a taxable loss on your taxes, which is great. But over time that goes away, and you will be making more in real life, and you will also be having to show profit on your taxes. Another big advantage to these investments is that they have the ability to be leveraged, or you can take a loan on them. And that allows you to stretch your money, because if you have $100,000 or $200,000, whatever your amount of money is, you could make 4 down payments at, let's say, 25% down. That's the last property that I bought, was 25% down. So you could either buy one property for $100,000, and let's say it brings in, let's just say $1,000 a month, which would be 1% of the purchase price. Or you can buy 4 properties that bring in $4,000 a month, and then minus your expenses and such. You all can see how this is able to leverage your money. And I wouldn't shoot for 1%. I'd try to shoot closer to 2% of rent to purchase price, but that's for another video as well. So that is the second path to wealth, money and success, real estate. All right, folks, on to the third path to wealth, success, money, freedom, especially. That's the end goal of this, is to be able to do whatever it is that you want to do, would be businesses. And this one can encompass a lot of things. Like, for example, real estate that we just spoke about ends up being a business. Even though it's an investment, it's a business. YouTube could be considered a business within a business, because you may be running your own YouTube channel like me, and you might be selling merchandise, and then that runs inside Google's YouTube platform that makes money for them. So for businesses, in the traditional sense especially, they typically have the highest barrier to entry. You're going to need to solve a problem or a question for somebody, and then you're going to need to have the skills, knowledge, and ability to do that proficiently over and over again. Oftentimes too, this comes with a substantial investment financially. You may actually have to take a loan or go into debt to get your company off the ground, depending on what type of things that you need. However, businesses are, if you can scale them, have the ability to scale and grow infinitely. This is what, the men who built America, the Rockefellers, Carnegies, and then Amazon's Jeff Bezos, Elon Musk. They have started these businesses, scaled them, and now they are enormous. This is the type of stuff that creates billionaires. This is also the type of stuff that mom and pop places, like your local HVAC company, electricians, anything, your hobby shops, whatever. This is how they can grow and make a living on their own terms, and have the success, money, and freedom that we're all talking about. The thing with the business is that if you want to have that as a hands-off thing where you can, sail around the world or go on vacation whenever you want, you need to scale it to the point where you're not needed on a day-to-day basis to facilitate that running. And that is what takes time, but it could potentially make you millions or even billions in the case of like your Amazons or your Facebooks or whatever. Businesses also have a lot of the same tax advantages as far as write-offs as real estate does. All of your expenses, for example, like rent or mortgage payments or insurance, fuel, vehicles, these things can either be deducted as an expense or depreciated over the life of those items, according to whatever the IRS table says. The only downside to that is a lot of times you have to pay self-employed taxes. So, for example, like the employer's portion of Social Security tax that you don't pay when you are a W-2 employee. So we've gone over the three kind of traditional classic paths to wealth. Some people might say, well, I can invest in crypto, maybe I'll win the lottery. Those aren't, traditional, put in the work, it's probably going to happen for you, paths to wealth. And that is the key to this, is if you keep your nose to the grindstone and you are doing something that either that there is a problem to be solved, or that you want to put roofs over people's head in real estate, or you want to cram a bunch of money into the stock market, it will probably work for you over time if you stay the course. So after those three, I have the one path that probably isn't going to lead you to where you want to be, and it's probably not going to be real popular, but that is a job. Guys, jobs are a big deal. We need them in this country, but the only problem with the job is that it stands for just over broke, and that's typically how a lot of folks run their lives. They live paycheck to paycheck. You can look it up. Study after study says that people in the United States, a lot of folks don't even have $1,000 to their name. If an emergency came up, they would have to go to credit cards and such. And the problem with a job is that you are trading your time, your limited time that you have on this earth, for money. And you only have so many hours to trade for money in a day. I mean, theoretically, you could only trade 24, but realistically, you need to sleep and eat and do other things. So, 16 to 18 at the most, and you would be, killing yourself. In addition to that, there's only so much money that you can make per hour for most people. Even if you're at, $200 an hour if that's your charge. There is a finite amount that you can make for that. And that money is highly taxed. Earned income, such as W-2 income, is taxed at some of the highest rates, much higher than long-term capital gains on investments. Tax rates run up to 37% for very high income individuals. So obviously you can offset that with some deductions and things of that nature, but just know that wages will always be taxed higher than investment income. It's the way it has been. I'm not sure if that is on purpose to encourage investment or on purpose to give tax breaks to folks that already have a lot of money and make most of theirs on investment income. That's a different conversation for a different day, but it just is the way it is. In addition, jobs are the opposite of freedom. When you get up in the morning and you don't feel like going to work, that is the opposite of what we're trying to achieve here, which is money, success, and freedom. You got to put in the 9 to 5 with your 30-minute lunch break and one 15-minute lunch break or smoke break in the morning and one in the afternoon. I mean, they're telling you what to do. However, for most folks, it is necessary for you to have a job of some sort, at least to generate capital to invest in, to have that W-2 income so that the banks feel comfortable lending you money to purchase other investments and to invest in the stock market. In addition, a lot of employers provide health insurance, which is a large cost item in the United States. So there are those factors to consider. But one of the benefits of having a job is oftentimes they offer a 401k that has a match associated with it. So they might match up to 6%. And so and it could be higher than that. They're all over the place, 3, 6, 10%, whatever. You need to take advantage of that match. That is free money. If you leave that on the table, you are leaving one of the biggest advantages of having a job with a 401k on the table. People that don't take their 401k match, you kind of just want to sock them in the face, because they are literally giving up money and giving it back to the employer. So what would I do and what have I done? Here is what I did. I first went out and got jobs. And then I had some little side companies here and there, like cutting grass, things of that nature, that I could do on my off days that I wasn't very interested in because it was active income and it would be hard to scale out of those. So then I got a part-time job to go along with my full-time job, and it was awful. I was trading more time for a little bit more money, and I was missing out on my family, friends, and pretty much everything enjoyable in life. And then after that, I went and started a real estate investment company. I had a couple of rentals that we've had, and we've had some that we've sold that have made large amounts of capital gains to allow us to buy more rentals, but I had a limited amount of funding to work with because I had just worked for a job. I didn't have many tangible investments that I could tap. So then I began also investing in the stock market. We had sold a couple pieces of property, ended up with a sizable amount of money, put that into the stock market in addition to large sums of money every month to continue building on those stock market gains. And over time that's built up, and we will continue to do stock market, the real estate investing, and the business that I'm in right now, hopefully will be YouTube, and helping you all out, and maybe I can get some ad revenue money from that. But looking back, if I could do it all over again, what I should have done is gotten a job initially, started socking away large amounts of money into a market account when I had almost no responsibility, when I didn't have kids, when I didn't own my own home, when I didn't have businesses to run and things of that nature. And we have a 747 coming over right now, which are really cool aircraft, and it's hard not to watch them because they're amazing. In any case, after I invest in the stock market, I would take those earnings, cash them out, move them into real estate, and then take the passive income that I make from real estate and reinvest that back into the stock market. That is what I would do if I could start all over again. Currently, I am taking the money that I make passively from real estate and I'm reinvesting that into stock markets, S&P funds. Actually, it's a total market fund called VTSAX through Vanguard. And that way I'm able to take my passive income and make passive income off of passive income. And that is really the way that you can start this wealth snowball building. Guys, I hope you liked this video. I hope it was helpful and gives you some ideas for you to get going. Again, subscribe to this channel so you don't miss any of my financial videos in the future. We got some great stuff coming up, especially how you can buy a residential multifamily apartment building for as low as 3.5% down. And then I have a whole list of videos that we're going to do. I would appreciate it if you would hit the like button for me. That really helps the channel, helps this video move up in rankings. And guys, tune in next time. I appreciate your watching.